To this week's weekly update. And this is going to be quite a brief update because it's Sunday now and Memorial Day tomorrow. So there's not going to be a lot of action in the market. But one thing that is moving is Bitcoin, and I'll talk about that shortly. But so these a lot of these currencies and stocks won't move much tomorrow. So I'll be updating via Twitter if there's anything that's changed from the strategy that I'm outlining right now. But one thing that will move, stocks won't move at all tomorrow. The US markets are closed. Currencies might move a little bit, but it'll probably be a little quiet. Although in thin markets, sometimes the markets do move quite a lot. And then Bitcoin is already moving around a bit this weekend, as it often does, and it might move again tomorrow. So let's just go through them one by one. And really nothing has changed significantly since my last weekly update, so there's not a lot to say. That's why it's going to be quite brief. But let's have a look at these. These are the currencies and stocks that I'm in at the moment, including what's not on the chart, and that's Bitcoin, but I'll show you that separately. But let's just have a look at what's going on here. So first of all, NASDAQ, and I'll just work from top left across. NASDAQ rallied a little bit on Friday, as you can see from this last candle, but not an awful lot. And we're holding above this low over here at about 11,200 or so, just a little bit below there. And my long-term view is pretty much the same. As long as we're moving down in NASDAQ, I'm going to be buying. We may not be at the bottom just yet, but I think it's potentially possible. That's using a double adjective there, but we might move up to about the 13,000 level, which is this red line, before proceeding further down. So what I'll be looking to do is to hold on to long positions, buy if the market moves down further. I've got orders stacked up. My position right now is not that large. It's quite small. But we've got support levels all the way beneath us, as you can see. Let me just check that I've got the log chart on here. Yes. So we've got various horizontal support levels demarcated by these green lines, and we've got the Fibonacci support levels as well. We've got the 61.8% just below us at about 10,500, which would be the next logical buying area. Then we've got another bit of support here at about 10,000, being a big round number, and also this previous resistance, and that's just below the 618 fib. And then we've got the 786 fib right the way down here at about 8,800, which would be a massive drop. That would be about a 50% drop in the overall market. So who knows? We could get there. I've got orders to buy all the way down. And as far as I'm concerned, the cheaper it gets, the better it is to buy. So my overall strategy is to hold on to these positions, continue to buy as the market drops if it does. But if we do get a bit of a rally, up to particularly this area here, 12,900, 13,000. This would be the area where I'll be actually looking to exit long positions and then sell for a continued move down. Now, remember, often in bear markets that we're in right now, these counter-trend rallies can be quite significant and really good opportunities to make some money. So overall, I'm still bearish. I think we may drop lower. No one really knows. There are all sorts of conflicting signals and signs and numbers and things that are coming up. So particularly this coming week, we've got the non-farm payrolls on Friday, which I'll talk about towards the end of this video, which will move the markets one way or the other, but perhaps not as much as normal, considering the overarching factors, economical, other economic, bit of a tongue twister, other economic overarching factors which are affecting the market right now, including geopolitical factors and commodity prices and that sort of thing. So that's really what we're looking at the NASDAQ. Buy lower if we get the chance. Otherwise, perhaps we'll get a rally up to about 13,000. And that'll be the place where I want to exit long positions and then revert back to short positions. It's possible we won't get above this level here, about 12,200, and then move lower. I don't really know. No one obviously knows. No one ever knows what's going on in the market for sure. But we're at a moment of pretty much, let's say, a level of uncertainty which is really high at the moment, and you'll see why for some of the other reasons that we'll look at shortly when it comes to currencies and other things. So let's have a look at the S&P. Pretty much the same. So I'm long with a very small position from around about these lows here at about 3,700, I think it is. Actually, I think it was 3,750. I'm long from there. And same sort of thing. We've got support levels beneath us. We've got Fibonacci levels. You can have a look at these and slow down this video for the exact numbers. But we've got support all the way down from 3.6, 3.4, 3.2, actually all on the 200s. 3,200 is the 61.8% fib. And then pretty much like the NASDAQ, we've got another number down here, all the way down at 2,750, 2,800. So that would be kind of the worst case scenario. If we do reach down there, we'll have dropped off pretty close to a 50% depreciation since the highs. So that would be an extreme level, but it's not out of the question right now. So same thing, I'm long here and looking to buy lower. Now, bear in mind, we've got some heavy traffic above us. We've got a trend line, a decent trend line, which has been in since March, April. A very neat, clear trend line, and that coincides with the 50-period moving average. This is a day chart. They're all day charts I'm looking at. We've got the 20-period moving average just above us. So we've got the trend line and the 50 above there, and then we've got the 100 and the 200 above that. So once again, similar to the NASDAQ, this area here at about 4,100, 4,200, that sort of region there, that's big resistance. But before we even get there, we've got this trend line. First of all, we've got the 20-period moving average just above us. It's going to take a bit of effort to get through there, and then some extraordinary effort to get through the trend line and the 50 MA. In bear markets, these resistance levels become really important because that's where all the selling steps in and propagates the continuation of the downtrend. So if we do get a move up through this area here, I'm not sure if we will, but who knows? We don't know for some of the reasons that I'll talk about. Now, one of the other currencies I'm in, which I don't often trade, this is the pound, South African rand. It's not just because I'm currently living in South Africa that this is an interesting currency to me, but it is an interesting pair because it affects not only my own trading, but also where I keep my personal money. One doesn't want to be holding on to a depreciating currency. South African rand, I'm very bearish on it there for various economic reasons. More recently, just in the last few weeks, we've had serious power problems in South Africa, electricity supply with coal-fired electricity stations just being terribly mismanaged. We're going through rolling blackouts up to 6 hours a day now, which is affecting industry and business and just general life in South Africa extremely negatively, and the economy. So plus on top of that, we're bound to get inflation and interest rate rises, which on the face of it would be positive for the South African rand if the interest rates increase. But overall, I expect that the pound, we'll have a look at the pound shortly, but I think the pound's going to, well, I'm saying this with a very, very large pinch of salt, but it looks like the pound might just be at the bottom of a very long-term pattern. We'll have a look at shortly. But for now, I'm long on this. I bought on the break of these two moving averages. You can see we've got a very significant break. First of all, I bought some here on the break of the 20 period. And then this last move up over the last couple of days has broken through both the 50 and the 100. And it's now acting as support, as you can see. We fell back down a little bit down towards that area. That's a very strong support area. It's also a support area in terms of the charts. And so I expect we'll move up to this 200 period moving average at about 20.2 rands to the pound, and then eventually move up through there, up to around, well, near these highs, around 21 and a half. And who knows, we could go up to these preceding highs here at around 23 or 24. So we're at 19.75 now. I'm expecting a move up to 21, 20, and well, call it, 21.20, somewhere around there, 21.50, and then eventually a move back up to around about 23.50. So I'm long on that currency. And overall, we've just got a really good pattern. If you look at the 4-hour chart, not only the pattern but also the economic problems, we've had a breakout through here, and this is where I first started getting into this currency a few days ago. If I put a trend line down here, you can see we had a breakout through there on the 4-hour chart, and we're now into this sort of uptrend like that. So pretty simple, and that breakout on the 4-hour chart also coincidentally broke out through all of these moving averages. So we've moved above the traffic, the heavy resistance areas that were kind of suppressing it a little bit, but we've moved up through there now, and all of these areas are acting as support. Not only the upward trend line that we've now started to form, but also the top side of the downward trend line. So any retracements back down to 19.5, 19.6, that sort of area where we've got all this congestion, an excellent place to buy if you're not already long on this currency. So I just need to go back to the NASDAQ quickly. If you're not long on the NASDAQ, now would probably be a good chance to get in, but again, with very small positions. And you can either put a stop loss beneath this low from mid-June, and wait for a move up to 12,900, 13,000, or you could start to add to your long position as it moves, if it breaks down beneath here and continues to move lower. And that would be more of a, not really a swing trading or a day trading situation, but more of a buy and hold, buying on longer term dips. So that's my approach to these two markets, S&P and NASDAQ. We talked about the pound, South African rand, the euro. Now we get into the interesting things. So the euro and the US dollar. Now I've got to switch across quickly to, I'm going to go to a monthly chart just to show you the overall scenario on the euro. So if we go back to 2003, 2002, when we were around about parity, where the euro was equal to $1 US, where we've approached that level once or twice, 2015, 2017. We're there right now, and 20% roughly of traders and analysts think that we're going to test parity again. I'm not too sure about that. This is a very significant support area that we're at the moment. It's been support on a couple of occasions. We've rallied back from there. I know we're in an overall downward trend in the euro, which makes me think that either, and I'll just draw that in for you, either we're going to capitulate on this downward trend, and we've got the shorter term downward trend over there, which you can't see on the monthly chart. So I'm going to switch across to the hourly. I'm going through this rather quickly because I don't want to waste too much time. There's the weekly downward trend. And if we go to daily charts, you'll see the same sort of thing on the daily chart. So there's the same trend line on the daily chart. So where are we at the moment? Okay, we've bounced off that. I'm long on this, by the way. I've bounced into, well, literally bounced into the trade on a test of these lows. I got in, can't remember the exact price. I think it was 1.04 round even. Got in there, and we're at 1.0427 right now. I'm really hoping that we're going to hold here at least temporarily. And when I say temporarily, it could be weeks or months or even just days. But I think that we'll probably try and retest this trend line. First of all, we got to get through the 20 and the 50 moving average. It's going to be hard work for the euro because we've moved down, and we're now for the third time in a row in recent days we're testing that low. And, well, we're either very close to complete capitulation here, and you'll see the same thing on the pound. When I look at the pound chart, I'm a little bit more hopeful that both the pound and the euro will recover against the US dollar. And also when I look at the dollar index, let me just quickly have a look there. Whilst we're here, I'm going to switch back to the euro, but let's just have a look at the dollar index. Where are we here? There we go. Dollar index. Okay, let's just get rid of this. Trying to get rid of this Fibonacci. So there's the dollar index. That's a daily chart view. The dollar index, remember, is it's the dollar. It's an index, compares the dollar to a basket of currencies like the euro, the yen, the pound. The euro and the yen are the two biggest ones, that followed by the British pound, and then a few other currencies thrown in there. I think Canadian dollar, and a couple of other ones. But if we have a look at the week chart, there's the dollar index. We're right at these highs here on the weekly chart, at around. There goes my dog. Sorry about that. I'm recording this on a Sunday afternoon, just relaxing. We've broken through that high, the previous high from 2017, but and we found support at that level. In fact, on a retracement back down there last week or the week before, but we haven't really moved higher. And potentially, if we have a look at the monthly chart on the dollar index, and the strong dollar is something pretty important in general, but if it gets too strong, it becomes a problem. And we're just holding above that trend line. A strong month last month again. But I think in general, if we have a look back to the daily chart a little bit closer, I think in general, if we have a look at this, there's potential for a retracement on the dollar index. We've got to break through this support here. Now, I can't trade the dollar index with my broker, but if you can, I think this is a good shorting opportunity. And I would put stops above 1.0630, somewhere around there, 1.0620, 30, for a move down to some of these moving averages here, and support a little bit lower. You can see there's not a lot of technical support on the chart in recent times, but there is support down here somewhere. And of course, we've got the 100 and the 200 moving average, which we've moved a long way from at the moment. So we've got support there and there at around about 100. And I would say perhaps we can get back to 100. That's about a 6% drop. Perhaps even just a poke through 100 and then some consolidation around there. So that's the dollar index. I think that the dollar has room to pull back. We've moved too far away from these moving averages for now. We probably need a little breather, and that's going to affect the euro and the pound and gives a little bit of hope. So I think they all coincide together. And really, it's a complete guess right now, but and a thumbs up, and you might even say a gamble. But trading is a gamble in general. But we're either going to capitulate through here, in which case I've got pretty tight stop losses on the euro, and that's okay by me. Or we're in for a big bonus, and this might be a very rare and unique long-term opportunity to buy both the euro and the pound. The movement on Friday was pretty encouraging. We got to move down, and we tested that area, and we've moved back up, bounced back up pretty strongly on Friday after another test of that low. So who knows? If we just get rid of that and have a look at the pound, this is even more interesting, actually. And if you have a look at I'm going to have a look at the monthly chart, and I'm going to try and draw this whilst I'm live with you here right now. And I've got a little drawing tool here, and let's see if we can put it in, head and shoulders pattern. So yeah, so what we have here, if I'm just going to draw this in, left shoulder, down there, up there, down to the head, right shoulder, and down to here. And then we'd be looking for a move back up to this area here. So this is a monthly chart on the pound. I'm going to just zoom out so we can get some more info. All right, we only go back to 2003 on these charts. But in any case, we're at basically a very, very long-term low, at least going back. I think we were down at this level perhaps 10 years prior to this. I can't remember. In fact, I can go across. Let's just do it while we're here and have a look at the, let's get rid of that and have a look at this on FXCM. I think this goes back a little bit further. Yeah, it does. So this is the FXCM chart, goes back to 94. Yeah, so we haven't been, well, the pound hasn't been in this region apart from 2017, 18, and where we are now. In the last 5 years, we've been lingering around very, very long-term lows, and we were nowhere near there, even going back as far as 1994. So let's just go back to the Oanda charts, and there we go. So that's where we are at the moment. Potentially a head and shoulders pattern on these very long-term. And let's just put that, let's make this a little bit more accurate. I think that'll do. Let's try and get that one in there. So that's the sort of thing we're looking at. And if we do complete this pattern, we should be sort of holding up above this trend line area here, roughly speaking, over the next number of months until about a year from now, we might be back at 1.4. So that's on the longer term view. I'm going to get rid of this now so we can zoom in a bit, and let's go to the weekly view on the pound. And you can see, all right, there is some danger below. So that's the head of that inverse head and shoulders pattern. In 2020, we got down to 1.14, sorry. So, and we're at 1.2 now. So there's 600 pips beneath us to reach that low. And that's not even saying that's a bottom. Who knows? But this area here where we're at now is very, very important support, shoulder support, and or neckline support, and shoulder support rather. And yeah, so we bounced off there twice now. The first time we took this trade, if you remember, long from 1.2 and got up quite a nice rally, a couple of hundred pips. And we've come back down there again this week. If we have a look at the daily chart, same thing happened on Friday. That happened to the euro. Bounced down, or a test of that 1.2 level. That's where I got in, exactly at 1.2. And we're at 1.21 almost now. So we're 100 pips up on this trade. I'm holding this trade. Stops below here, below the low on the, was that 14th of June. At one point, that got down to 1.193. And I've got my stop loss set below 1.19. So that's the strategy on the pound. Whether we're going to hold that or not, I really don't know. But so far, so good. I was very pleased with that bounce on Friday. Indicates some buying down here, some determination to keep above the 1.2 level. And looking at that long-term pattern, well, who knows? Inverse head and shoulders, very, very long-term. Looking at the monthly chart, it's very possible that might play out. I don't know. No one knows, of course, as I keep on saying. The pound and the euro, both potentially going to capitulate and fall down quite dramatically from here, another few hundred pips. But there's equal potential for a rally on those. So dollar yen, this is the one that everyone's been worried about and asking about. If I have a look at the, let's just pause this for a second. All right, sorry about the dog barking. I've had to pause the video. So this is the one everyone's been asking about, and I've been short on this currency pair for a number of days now, and I just renewed, averaged in somewhere up there, and had some shorts from around about here. So my average price is 136, and the chart's very, very clear. It's not a complicated chart. I was about to say, so if you have a look at on TradingView, where you can get all sorts of cool information like heat maps for stocks and positions for currencies, the overall sentiment of the market. There are some people that are 1,000 pips negative on this trade, people that have been selling from 125 or 126 We're now at 136. There are a lot of people apparently, according to TradingView, that are still holding on to short positions from all the way down here. So luckily we've got in over here near the top. Hopefully it's near the top, but it's pretty evident from the chart that people are still wanting to short this currency. Every time we've got negative diversion, I'm not going to show you now, but on the daily stochastic, we've got negative divergence. We've got repeated attempts at creating new highs very insipidly. We've got this trend line just beneath us that we poked through very briefly, but didn't manage to close below that, just having touched that 20-day moving average. So, yeah, so, I mean, just looking at it, it's pretty simple. We need to break beneath this 20 period. We need to break beneath this trend line. Next target is 131. And with a bit of luck, 126, 127, somewhere around there, which is where the 100-day moving average. So we've got to get, and what's interesting is the 50-day moving average coincides with this horizontal support line. The 100-day moving average coincides with this horizontal support line, and the 20-period moving average coincides with this support trend line. So we've just got to break through these, really. That's what we're looking for. Now, bear in mind that we might move higher on this. I'm prepared to average into this up to about 140. I've got a fairly small position on this trade. But we might move higher. If the pound and the euro do decide to capitulate, which they easily could do, then this might move higher, depending on the euro yen and the pound yen crosses, which also play a role in this. But overall, I think we've got a chance of breaking lower. In fact, I think all of these currencies got a chance of strengthening against the US dollar. And if you look at the dollar index chart, that sort of lends some credence to that. So we're at very important levels, both in stock markets and in currency markets all around. And it'll be really interesting to see what happens. So having said all of that, I'm in all of these instruments. I'm in the NASDAQ. I've given you my trades on that. S&P, same sort of thing. I'm long on these. I'm willing to buy into further dips, and I'll be taking profit at those resistance lines, 12,800-ish on the NASDAQ, and I think it's 1.41-ish on the S&P. Pound South African Rand, I'm long. This is a long-term hold. I'm looking to trade this to much higher levels. I think this is going to finally give up the ghost, the Rand I'm talking about. In other words, this chart will rally. I'm also willing to add to dips into these levels. I'm in a small position here because I realize I've got to give it a little bit of space to the downside just in case we get some fluctuation there. But overall, I think that's a pretty solid, decent trade, and it's an interesting one, and I think it's a good one. So I'm very happy with that one. Euro, well, I'm long on there. I'm about 100 pips in, 30 pips in profit on the euro, 27 to be precise. And I'm 91 pips in profit on the pound. So I'm hoping for these to move higher. Happy with the price action on Friday. I think it looks pretty good. But, we've got a lot of heavy traffic above us on both of these currencies. And so we've got a lot of work to do if these are going to move higher. But who knows? We'll find out what happens as this week begins. And I think this week's going to be pretty crucial. We'll talk about the economic stuff that's coming out during the week, but the most important one, there's a little bit during midweek, but we've got the non-farm payrolls coming out on Friday, which is always important. So that's that. Let's have a look at crypto. I've just bought some more Bitcoin, and let's try and find that. All right, so here's Bitcoin. Let's just get that into the screen. So Bitcoin, I bought some yesterday at just about where we are now. 19,000 or so. I think I bought at 19,070. So we're at 19,023 now. So it's dropped just a fraction. But I think any dips on Bitcoin are a really good opportunity to buy. This is, for me, it's not a swing trade. It's not a day trade. This is just a buy and hold. So the lower it goes, the more I want to buy of it. If we drop down below these supports that we've formed here before, again, sort of mid-June, we'll be heading lower. And we're at this support now. We have broken through 20,000, and I know it's a big round number, and it's also previous support over there. Well, resistance, but it's now support. So we have broken through there, which is concerning. It shows some weakness, but we've consolidated around there. We haven't dropped through. It's looking a little weak at the moment, I have to say. And you have two choices on Bitcoin. You either start buying now and hope that it moves up, and be willing to buy lower down, or stop yourself out and buy if it drops further, or you wait for it to drop further down to the 1400 level, 14,000 level, and wait for it to drop down there before buying. And there are risks on both of those. First one, if you buy now, you risk it dropping down and you're going into negative equity on that trade. But it'll give you more opportunity to buy more in at a lower price. Therefore, you should probably ease into this and buy. Don't put all your eggs into one basket right now. So buy some now and buy some later, or buy some now and wait and get stopped out and buy some later. Or you can wait and buy later and not buy any now at all, and wait for it to get down to this level at 13,000, 14,000, thereabouts, but risk the possibility. And I don't want to FOMO you into anything. That's the last thing you want to be, but you may then well just miss out on a rally from the current prices, and it may never get down there. And you may have missed out on getting a real bargain price on Bitcoin. I don't know. Again, we're at risk of capitulation on this as well. So capitulation on Bitcoin means a move down to 14,000. And possibly, I hate to say it, even down to around 10,000, which means half of the current price. So I don't know. I've told you my strategy. I'm buying into this right now. I'm willing to buy all the way down to 12,000, even 10,000. So that's my strategy. It's not something that you should be putting all of your money into. It's not something that you should be risking your house on, or you should be selling your dog and the cat and your wife and your best crockery and silverware for. But it's worth having a go. That's my opinion. Let's just switch this chart back to the euro so we keep it all together. So that's that, really. I think that's covered everything. There's nothing else that I'm in. So I'm in all of these here, and plus Bitcoin. So I'm in 7 different instruments at the moment. That's not normal for me. But I think there are opportunities here. When I say opportunities, it's really a bit of a coin toss. But my risk is covered. And the upside, if it does go in the way that I'm hoping it will, and I use that word hope very loosely because there's no such thing as hope in the market. It's just going to do what it's going to do. So, but for my personal sake, I hope that we get some rallies in NASDAQ, S&P, pound, South African rand, euro, British pound, and we get a fall in the dollar yen and a rally in Bitcoin. That's what I'm hoping for my side. I don't know what the market's going to do. I have no idea. We're at the point of decision. I think it's really important to know that this market could go anywhere at the moment, and it's probably going to go fairly quickly, whichever way it goes. So make sure you've got your stop losses in. Don't risk money that you can't afford to lose. Don't overcapitalize on different positions. And I've actually spread mine out across all of these 7 instruments that I've been talking about, these 6 here on the chart, plus Bitcoin. I've spread them out across those 7 instruments because even though they are correlated to each other, they all behave slightly differently and react differently to different economic things that are going, indicators and situations and macroeconomic perspectives. So I'm spreading my risk a little bit by trading across a variety, a basket of instruments rather than just one single thing. So that having been said, that's my strategy for the week. I don't know what's going to happen tomorrow. As I said, tomorrow being Memorial Day, the 4th of July, markets may be very quiet, or there might be traders, organizations, institutions that take advantage of the thin markets and try to move the markets one way or the other. One thing I do know, however, though, is that stock markets are not going to move the US stocks, but the European and Asian stocks might. So let's go and have a look at the calendar for the week quickly. Just going to pause it. All right, so here's the week calendar. If you're interested, you can get this from my FX book. It's free. You just sign up, and they've got all sorts of amazing stuff, including this calendar. It's very handy. They send it out every Sunday, and it gives you an idea of what's going on in the market. They even mark what's of importance, low, medium, and high. And often I just scan down the right-hand side here and look at the importance of these different things. But let's just have a quick look. I don't think there's much on Monday because of the Independence Day holiday. We got inflation rates in Switzerland, for example. I'm just scanning through this very quickly. Germany, balance of trade, Turkey, Brazil, UAE, India, Kuwait. Euro area, we've got producer price index in the euro area. Okay, I'm not sure what that's going to turn out to be. Also, incidentally, you can click on these. So let's say, okay, I don't really know what this might be or is forecast to be. I can just click on there. And, okay, you do get these adverts coming up, which you have to deal with. So there we go. That's generally an upward trend. So you can read about, so producer price change in the Eurozone calculates average change in price of products and services sold by manufacturers and producers in the wholesale market over time. So this is not the same as CPI, this is PPI, and that's going up as it would do because CPI is going up as well. All right, so that's that. And then let's go through all of this. So nothing in the US. Algeria has Independence Day as well, and Armenia has Constitution Day. That's interesting. Cape Verde has Independence Day. So lots of Independence Days. Venezuela, Zambia. Can you believe it? So it's not just the US. There are holidays all over the show. All right, and then we go down the list. Now we're on Tuesday. This will be interesting. South Africa, global S&P global PMI. Various things coming out in Europe. United Kingdom, PMI. That's listed as high priority or high importance. So on Tuesday in the US, nothing really. Factory orders, etc. Nothing. Got the okay, this might be interesting, 3-month and 6-month bill. I'm not going to go into that. In fact, I might do a video on those things sometime. But these are quite interesting at the moment, and they will have some effect on the markets. And let's go across, so into Wednesday. Retail sales in Austria. Let's have retail sales in the euro area. Okay, marked as high importance here on the calendar. So that always does move the markets a little bit. And that's Wednesday. Okay, so in the US, let's see what's going on in the US. We've got the 30-year mortgage rate. Nothing much going on there. Yeah. So ISM non-manufacturing, PMI, etc., crude oil, stock exchange, balance of trade in Australia, unemployment, Switzerland. So nothing really. There might be some of these that affect the market. I'm not saying none of these would be important, but in general, next week's all about the jobs again. And on Thursday, I'm looking mainly at the US stuff here because considering we're trading everything against the dollar. So really what we're looking for is stuff that's going to affect the dollar and the US stock markets, which also tend to move in some form of correlation together. So it's all about the dollar and the stock markets and inflation and interest rates. That's a summary of it all. But the Thursday we've got jobless claims, as we do every week. Yeah, I don't know what the predictions are. We could have a quick look, I suppose. Let's have a look at initial jobless claims. Yeah, so consensus is 230,000. It doesn't look like there'll be any surprises there. So, and then let's go all the way down. Then we got a few other things. Gasoline. Okay, that's going to be interesting. Oh, we haven't talked about oil. I'm going to quickly put those charts up for you shortly. But let's go to Friday. And so this is an interesting one. So we get to non-farm payrolls, which is here. I'm not sure what's expected. I'll delve into more of this in some detail as the week goes on. But okay, so the number is 270K. Consensus is 270K. Last month, it was 325. The actual was a bit better. That's bullish for the dollar. This month, if we below 270, it's bearish for the dollar. If it's above, it's bullish for the dollar. You can see it's been pretty consistent and stable, even though the forecasts have been off every other week, every other month rather. Overall, it's pretty stable, so I don't expect any real surprises from that. Actually, if you look at this pattern, so 1 month where the forecast and the actual are pretty close. Next month they're far apart. Then they're close. Then they're far apart. Then they're close, far apart. Close, close, far apart. And at the moment we're close and close. So the last 2 months, April and May, have both been pretty close to each other, the forecast or the consensus and the actual. So going on this, actually we're going to get a bit of a surprise. It wouldn't be surprising if we got something different to the consensus. So consensus 270K jobs, non-farm payrolls. So we could be just looking at this as a rough trend. 1 month we're accurate, next we're not, accurate, not, and so on. And we've been accurate for 2 months in a row now, consensus and the actual. So it's not out of possibility that we'll get a surprise which will move the market one way or the other. So that's Friday, pretty important. And then ends the week. Now, I wanted to go back to the charts just to finish this off and have a look at two things. And first of all, we're going to look at oil. And oil is interesting. If you've been following me, you'll know that I've been shorting oil. I was shorting oil from the top here. Did pretty well on that. Oil's come right back in. I was considering to buy oil at this red line here. We didn't get down. We only got down to this fib level here. I wanted to buy at this support. So I missed out on that. That's okay. And we rallied off this area, off this fib level, back up to the 20-period moving average. So, and then fallen back down again, but we're going up again now. So oil in general, if we get back up to the 126 level on this chart, and this is the CFD price for oil. Hang on, where are we now? It's not in Forex. All right, let's see what we've got. Yeah, so it's the Oanda CFD rate, which is not the same as the Brent crude oil rate. It's slightly higher, but it doesn't matter. The point is, if we get back up to these highs, I'll be looking to sell again, and particularly if we get up to, on this chart, the 130, between 130 and 140. If we do get back up there, once again, I'll be selling this Brent crude oil instrument on the Oanda CFDs. And so I did quite well there, actually really well. It's a pity I didn't get in on the longs, but there we go. Now the next chance is perhaps we'll get back down to here. There's this pretty interesting purple trend line, which I rather like. And then we've got the 200 period moving average down here, which I also like. So basically we're right in the middle. And you've seen me using that silly phrase, don't diddle in the middle. Well, we're right in the middle on oil, but it's going to move one way or the other. We're going to move down for chances to buy or move up for chances to sell. And the other one that I was hoping to get into was natural gas. I was looking to sell this a wee bit higher. We didn't get up to that level. And if you look at much longer term charts, I'll show you why. I'm not sure how far we go. You can see there, that's the weekly chart on natural gas. I wanted to get up to this black line. You can see I've already got it in there at 10 point, we'll call it 11. And we only got up to 9.5. So I wanted to sell up there. Didn't get up there, so I missed out on that trade. And that's a really good resistance level from there. And it's most of the way up to those previous highs. And unfortunately, we dropped back all the way down to the current levels where we are now. So we dropped from 9.5 to 5.5, which is a massive drop, 40% drop. So missed out on that one. And I'm not willing to buy or sell this one right now, but it's just interesting that I had the right idea, but it didn't get up to my sell levels up there at around 10.5, 11. So that's natural gas. Oil we've just talked about. I'll be looking to buy lower down. I really like this 200 period moving average area. That's at about 98 on this chart. And you can see if we have a look at a longer term view, it's always acted as a really good support level. Or resistance if we're below it. There we were below and it was good resistance. And okay, there we were just kind of ranging for a long time. But if we can get back down to that 200 period moving average, around about 100 on this chart, or even into these levels here, I might start averaging into long positions. So that's oil, Brent, crude, oil. Right, so I think that's really that. I'm going to switch this back to the euro before I forget, because I've got to keep an eye on this as the markets open a little bit later on. So we've covered the 6 instruments that I'm in. That's the Nasdaq, S&P, pound, South African rand, euro, US dollar, British pound, US dollar, and dollar yen. And we've talked about crypto. I've given you my strategies on all of those, and we've also talked about oil. I've given you my strategy on oil and natural gas. Well, nothing to do there. One more thing I need to quickly look at before we go. I've just forgotten this one as well, and that's gold. People are always interested in gold, so let's have a look at gold. My idea on gold has always been, recently, at least in the last number of months, is to wait for gold to drop lower to buy. It did drop lower. It only dropped down to 1790 or so. That's there. This was on Friday. Nice drop down, but we bounced up dramatically from there. I'm not sure if that's going to be a bottom. I don't think so. I think gold's got space for a further move lower. And I've got these red lines down here. So this is the sort of price I'll be looking to buy at. I think that would be a great opportunity. So that's at about 1760 and 1720. So those are my 2 buy zones for gold. And I still consider this to be stuck in the middle, as I've often said. So wait for gold to drop. I might miss out on this. It might rally. That was a nice spike on Friday. Very nice looking chart pattern. I'll tell you what, if you'd like to try your hand at gold, in fact, now that I'm looking at it, I might have a go myself. In fact, I probably will. I've just changed my mind whilst I'm talking to you. I kind of like this pattern. Reason, we've got a beautiful reversal candle against a lovely support area, previous support from over there. Okay, we didn't get down to 1760, but we did get to close to 1780. You can see that green line, that where we reached. It's support all the way along here. And I might have a go at this actually. I'm just having a look at how far back this line goes. So all the way along here, it's a central line in this congested area, in this consolidation area. It's support going to there, and it acted as a pretty decent support and reaction to that support on Friday. And that's where we are in gold at 1809. And if you were going to buy this, go in that, you'd probably get it at 1810 with a spread, and stop loss beneath these lows, which is at 1780. So let's make it 1775 stop loss, 1775, because I don't like 80s and 20s as stop losses because they are natural price magnets. So entry price, let's call it 1810, stop loss 1775. I'm going to have a go at this. I'll try a small position on it, but overall, I'm actually thinking this might drop lower, so it is a risky proposition. It's probably worth a go. If we do get into this trade and it breaks up through, once again, we've got an awful amount of traffic above us. We've got 3 moving averages. We've got the 50, we've got the 200, we've got the 50, and we've got the 20 all above us, and this trend line. And but potential for a nice move up to 1880. So we can get in with quite a small stop loss, 17. Oh, let's call it 1810 minus 1775. That's 25, 35 pip stop loss or point stop loss, and the upside is 1810 to 1880. So that's 70. So it's a 2-to-1 risk-reward ratio. So we've got a 70-point upside and a 35-point downside. I think that looks good. I'm going to try it with a smallish position, and if it gets stopped out, so be it. There'll be a chance to buy a bit lower down again. So that's gold. Keep an eye on that, and I will speak to you during the week. Go to my Twitter channel, subscribe there, or follow me on Twitter, and please subscribe to this video channel, because you'll get to hear about new videos as they occur. So thanks very much, and I'll speak to you again soon. Good luck for the trading week ahead. And next video comes out on Sunday, unless there's something more interesting to talk about during the week.